What does the EU think about NAMA, and do you think it's a realistic solution to our current problem?
Well, it's in a way related to the previous question, because Ireland is not the only country that has a huge problem with its banks. Every single member state has massive problems with their banks. They're all affected by what happened when the Lehman Brothers collapsed. So at EU level, there's a variety of things happening. First of all, Commissioner McCreevy has admitted that the regulatory arrangements for supervising banks and insurance companies haven't been adequate. He's put in place a consultation, a public consultation, asking people to give views as to how the banking system could be improved. It's ongoing. There's a hearing in Brussels in early September about it. He's effectively saying, and this was committed very recently, that the remuneration of bankers and those lending should be curtailed, and there should be much more transparency about it. The European Commissioner responsible for competition was in Dublin last week talking to Brian Lennon about the NAMA legislation. The NAMA legislation has to be approved under EU state aid guidelines. The reason being is that if Ireland was allowed to subsidise its banks for the next 50 years, it would give them all an unfair advantage over the banks in Germany or Greece or Denmark. So the European Commission has set down very clear guidelines, so when the Irish government goes to Brussels with the NAMA bill, that it has to comply with certain rules and regulations. And all the banks have to, believe it or not, have to produce a viability plan, because when you get state subsidies, and a bank guarantee is a state subsidy, the rules are that you can only get it for a certain period of time. So the banks are going to be asked to produce viability plans, and if needs be, they're asked to produce restructuring plans. So in other words, how over a certain period of time can they become self-contained without having had subsidies, and the taxpayer and shareholders effectively will have to take their place. So the Commission has issued very strong guidelines to member states to try and help them put their NAMAs together. As I said, it's a €2 trillion problem, and we think we're bad. The Austrians have huge issues. Their banks are exposed between 400 billion because of lending to Eastern and Central Europe. So it is an enormous problem that has EU-wide ramifications, hence the EU has a role.
And will the EU be working closely with NAMA in that regard, if the legislation goes through?
I would say that the EU has approved the restructuring of Anglo, it's approved the recapitalisation of banks, it has taken very quick decisions to enable the bank guarantee system to be put in place. Typically, state aid decisions take a year. In Brussels now, they're taking these decisions in a week. The reason being that there's been systemic failure of the banking system. So the EU is not slouching around, it's taking quick decisions. And that's been a huge benefit to Ireland. We had to wait for Brussels approval. The financial system would have collapsed. Brussels approved the tough measures that had to be taken and have endorsed the tough measures that have been taken. But they're making sure that the Irish government doesn't give, say for example, let AIB off the hook. So in other words, AIB will get government subsidies for the next 20 years, so AIB will become without any debt and will give AIB a competitive advantage over the Bank of Ireland, or give a competitive advantage over Santander Bank. So they have to make sure there's competition between the banks, and one bank doesn't get extra advantages and favours, and that's the reason why there's an EU involvement. But Commissioner McCreevy, who's the Commissioner responsible for financial regulation, has really laid down the law in a few speeches here in Dublin recently, saying the insurance and regulatory system has to sort itself out, and the Commission has just brought forward some proposals, or more to follow on the whole issue of supervising banks and supervising particularly investment in securitisation and lending. So it's a big agenda at European level, and when it all sorts itself out, which it will, the banks will be stronger and they'll be managed to a position of strength, thankfully, because it's an EU framework in place.